Welcome to the Shakaama Live Show with your host, Shakaama. Vanguard reaches $4 trillion for first time. Index fund pioneer attracted by $49 billion in new net money in January. According to the Wall Street Journal, indexing pioneer Vanguard has climbed to $4 trillion in assets for the first time, accentuating a loss of faith among investors and traditional money managers who handpick stocks. The record for $4.048 trillion reached at the end of January follows a year when Vanguard's fund pulled in more new money than all of its competitors combined, according to one industry total. Of the $533 billion of net flows into all mutual funds and exchange-traded funds last year, 54% or $289 billion went to funds managed by Vanguard, according to research firm Morningstar Inc. The fund company's own tally for the year was even higher at $322.8 billion. The rush in Vanguard is largely the result of a push to embrace funds that mimic broad indexes for a fraction of the cost of traditionally active managed mutual funds. Vanguard, which started the first index mutual fund for individual investors 40 years ago, is number 2 in the asset management world behind New York-based BlackRock Inc., another money management giant benefiting from shifting investor tastes. BlackRock topped $5 trillion in assets late last year for the first time. It has a larger international business than Vanguard. Rival firms who had long been synonymous with their star pickers of stocks and bonds have been hurt by years of subpar performance and relatively high fees. Investors pulled a net $340.1 billion from US-based actively managed funds last year, according to Morningstar, while pouring a record $504.8 billion into US-based passively managed funds. Active management remains a high-margin business, and with many investors loath to switch funds for reasons from tax concerns to inertia, firms can continue to earn high, hefty profits even in interest in index pickups. At the same time, signs of retrenchment are emerging into the business. Mutual fund firms last year started the fewest new US-based actively managed mutual funds in 14 years, according to Morningstar. The amount of funds liquidated or emerged with the highest since 2009. Quote, "It signifies how popular passive investing has become, that investors are increasingly more comfortable paying less for average benchmark performance instead of trying to beat the benchmark and in many cases fail," said Todd Rosenbluth, director of ETF and mutual fund research at CFRA, a research firm. Vanguard crossed the $4 trillion mark in January after collecting an estimated $49 billion in new cash from investors during the month. Of those January flows, about $45 billion went into index funds, while the balance went to actively managed funds. Vanguard crossed the $3 trillion threshold in August of 2014. In 2016, index funds accounted for about 85% of the total new cash Vanguard attracted. Slightly less than a third of the global net inflows went to the firm's ETFs. Across asset classes, about half of the new money Vanguard pulled into globally last year went into stock funds, and nearly 40% went into both funds, with a balance in money market and balanced funds. Vanguard in recent years has gained market share at the expense of rivals including Fidelity Investments. Vanguard is owned by its fund shareholders, a structure that allows it to keep expenses lower, and it has an undercutting many competitors on fees. Other fund companies have cut fees but haven't attracted as much new cash. There are dangers for fund companies that rely on passive investment. Vanguard and other large passive funds have benefited from rising markets. Index funds can't protect investors from index decline, and a widespread downturn could lead investors to conclude they would have a greater chance of avoiding losses with stock pickers. A spokeswoman for the firm said it is grateful to investors for the assets, but said growth isn't the firm's goal. The rapid growth of Vanguard has led to an increase in client calls and some customers' complaint about long wait times. According to the company, Vanguard doesn't have a network of retail branches like some of its competitors. Vanguard executives said in a client webinar this year that the firm has received unprecedented phone volumes, but that it doesn't trade costs for service. Quote, "We hate it. We're doing everything we possibly can to bring those wait times down to acceptable levels," said Chris McIsaac, managing director of Vanguard's Planning and Development Group. Vanguard, which has a staff of about 15,000, hired more than 1,700 new full-time staff members last year and said it expects to hire a similar number of people in 2017. Why am I reporting on Vanguard? Because I used to own Vanguard. And when the bottom fell out of my world, when I was let go, downsized from corporate America, I had cashed out on my Vanguard stock. There you go. I don't know if you needed to know all that, but thank you for watching the Shakaama Live Show.
I'm wasted.